All right, today we're going to tackle a topic that every single business owner needs to understand: workers' compensation. I know, it can sound super complicated, but stick with me. By the end of this, you'll see it's not just another expense, it's one of the most important shields you have for your business. Let's dive in. Okay, let's start with a really direct question. Just think about it for a second. One of your employees gets hurt on the job: a slip, a fall, a repetitive strain injury, anything. Could the mountain of medical bills and the lawsuit that follows be enough to actually shut your doors for good? Yeah, it's a terrifying thought, right? But it's a real risk. And that's precisely why this system exists. It wasn't always like this. Before workers' comp, if you got hurt, your only real option was to sue your boss. It was basically the lawsuit lottery, a total gamble that was expensive, took forever, and could easily ruin both the employee and the business owner. But now we have something way better, something called the grand bargain. It's a no-fault system that gives employees guaranteed help and gives you, the employer, critical legal protection. Okay, so let's lock in on that term, the grand bargain. This is the absolute core concept, the trade-off that makes the whole system work. So here's the deal. It's a trade-off, right? A two-way street. Your employees give up their right to sue you for most on-the-job injuries. In return, you provide an insurance policy that's going to take care of their medical bills and cover their lost wages. At the end of the day, it's about protection, not pointing fingers. Okay, so we've covered the why. Now let's get into the nitty-gritty. The what. What are you actually paying for? Let's break down the 6 pillars of protection that this policy offers your people. Basically, a typical policy is broken down into these 6 main benefit categories. Each one is designed to handle a different piece of the puzzle when an employee gets hurt. So let's take a look. All right, first up, and this is the big one, medical benefits. This covers pretty much everything you can think of: doctor's visits, hospital stays, surgery, prescriptions, physical therapy, you name it. And here's the super important part for your employee: there are no deductibles. None. The policy pays from $1. Okay, next up, disability benefits. This is huge. If an injury is bad enough that your employee can't work, this benefit kicks in to replace a big chunk of their lost wages. This means they can actually focus on getting better instead of stressing about how to pay their rent. And this applies whether they're out for a few weeks or, in the worst case scenario, permanently. Now, the policy also covers some scenarios that you hope you'll never, ever need, but are absolutely critical. Vocational rehab can help pay for job retraining if someone's injury means they can't go back to their old job. And if the absolute worst happens, death benefits are there to provide financial support to the worker's family. But it's also really important to understand what's not covered. This isn't a free-for-all. The policy is for work-related injuries. So things like an injury that happens at home, or one that's a result of being intoxicated, or, in most cases, an accident during the daily commute to and from work, those are typically not covered. All right, we've seen all the great stuff it covers. I know what you're thinking now. Okay, what's this going to cost me? So let's pull back the curtain and demystify how your insurance premium is actually calculated. It might sound complicated, but the basic formula is pretty straightforward. Think of it in 3 steps. First, you start with your total payroll. Second, you multiply that by a rate that's based on how risky the jobs are at your company. A roofer's rate is going to be way different than an accountant's, right? Makes sense? And third, that number gets adjusted based on your company's specific safety record. And that last piece, that's the magic number. It's called your experience mod factor, or just mod. And this is where you have a ton of control. Think of it like a safety report card for your business. A 1.0 is average for your industry. If your mod is below 1.0, you get a discount, a reward for being safe. If it's above 1.0, you pay a penalty. And wow, look at the difference this can make in real dollars. An average business here might pay 20 grand, but a really safe business with a great MOD score, they're saving $3,000. On the flip side, the business with a poor safety record is paying an extra $5,000. The takeaway here is so simple. A safe workplace literally saves you money. Period. Okay, theory is great, but what happens in the real world when someone actually gets hurt? It's not as chaotic as you might think. There's a clear 8-step journey that takes a claim from the moment of injury all the way through to recovery. So step 1, the injury happens. The first thing your employee does is tell you. Then you immediately report it to your insurance company. From there, the system kicks in. Medical care starts right away. An adjuster investigates the claim. Benefits get paid out if needed. And everyone works on a plan to get the employee back on their feet and back to work safely. It's a structured process. Let's put this into practice. Imagine a construction site. A worker falls from a ladder, fractures his arm. What happens? Well, the system works. His medical bills? Covered. The pay he lost for those 8 weeks he was out? Covered. And for the business owner? That lawsuit that could have sunk the company? It's off the table. And hey, this isn't just for dangerous jobs or big dramatic accidents. Think about a regular office environment. An employee starts developing carpal tunnel syndrome from typing all day. The policy covers that too. It pays for the treatment and the therapy, and that helps them get back to normal, preventing what could have been a career-ending disability. Okay, so you understand how it's supposed to work, but let's talk about how it can go wrong. There are a few critical mistakes that can completely blow up in your face and cost you, well, everything. And the absolute biggest landmine here is misclassifying your workers. The difference between an employee and an independent contractor, it all boils down to one word: control. If you're the one calling the shots on how they do the work, when they do it, where they do it, and you're providing the tools, guess what? They're an employee no matter what their 1099 says. Seriously, this is the #1 mistake we see. Trying to save a few bucks by calling an employee a 1099 contractor to dodge paying for workers' comp insurance is like playing with fire. If you get caught, we're talking about massive fines, having to pay all the premiums you should have paid, and in some cases, even criminal penalties. Trust me, it is never, ever worth the risk. So we've gone through all the mechanics, the costs, the rules, but I want to wrap up by zooming out a little bit, because this is about so much more than just a piece of paper you're legally required to have. Think about what workers' comp really is. It's a shield that protects you from a lawsuit that could wipe you out. It's the financial bedrock that lets your business survive a crisis. For your people, it's a lifeline when they are at their most vulnerable. And honestly, it's your moral responsibility to take care of the people who show up every day to help build your business. I'm going to leave you with this one thought, because it just says it all so perfectly. Workers' compensation insurance is not just about compliance. It's about protecting your people, your business, and your future. If someone works for you, this policy can be the difference between recovery and disaster.